Hello and welcome everyone to the week ahead commodity report for the 13th to the 18th of August 2018, presented by myself, Phil Carr, at the Gold and Silver Club. So today we will be taking a closer look at gold, silver and oil prices as we go into next week. One of the biggest news stories on Friday was the Turkish lira hitting an all-time low against the US dollar after President Donald Trump proclaimed on Twitter he was doubling down on tariffs to Turkey, and with that we immediately saw an impact with the Turkish lira. So the tariff on aluminium would now be 20%, whilst the levy on steel would rise to 50%. We immediately saw that have impact across the financial markets. The US dollar broke out to 13-month highs. The Turkish lira collapsed as much as 23% to a record low. Russia's ruble crumbled to its lowest in more than 2 years, and the euro and the pound touched their weakest level in 1 year. And what we're seeing at the moment with the precious metals is a battle between a strengthening US dollar and also the safe haven demand that we tend to see with gold during these times of economic uncertainty. If we have a look at gold and silver price here into the close on Friday, gold closed flat at $1,210 per ounce, and silver priced in US dollars closed at $15.27 per ounce. What you want to really take note of is not only gold and silver priced in US dollars, you need to be having a look at the bigger picture here. This is gold priced in the Turkish lira, and you can see here we had over a 20% move to the upside on Friday, a significant breakout. So we are of course seeing gold demand priced in other currencies. On Friday, gold priced in euros broke out to 3-week highs, so we've now seen clearance above a lot of this resistance on gold versus the euro. Gold priced in New Zealand dollars broke out to 1-month highs on Friday, and this follows on from Thursday when the New Zealand Central Bank stated they are going to keep interest rates at record lows until 2020. So we immediately saw a sell-off on the New Zealand dollar, and gold of course versus the New Zealand dollar has broken out to the upside, and gold versus the Canadian dollar has broken out here to 1-week highs. Then finally, if we have a look at gold priced in US dollars, you can see here where we've been consolidating for the last week or so here, we've been ricocheting really just above $1,200 per ounce up to approximately $1,217. We've been within a very tight range here on gold versus the US dollar, but the reason gold versus the US dollar at the moment cannot break out is because of the dollar strength. So this is the dollar index, and you can see very clearly where the dollar index is now broken out to 13-month highs. So when you are tracking gold, you need to be aware of not only what gold is doing versus the US dollar, but you need to be having a look at the wider picture here. So gold is breaking out in a number of currencies at the moment. Now moving over to the levels here that we're looking at as we go into next week. So first of all, if we have a look at gold versus the US dollar, we have broken above some resistance here. So we've been consolidating over the last few days. We broke out of this downward trending channel, but we haven't managed to break and close above the resistance zone, which right now resides at $1,217 per ounce. If gold can break out of this recent range, the next targets would be $1,226 and then $1,233 per ounce. On the flip side of that, of course, if gold is unable to follow through and get additional support, then likely come in for a revisit back towards $1,205, and then the next level of support, of course, resides at $1,200, which is a very key psychological level of support as well at that zone. And then below that, if gold was to flash out further, the next key level here would be $1,191 per ounce if gold was to break through this support level going into next week. Now moving over to the price action on silver here, silver has really been quite range bound here for approximately a month now. So we've continued to see support come in just above $15 per ounce for silver, and we also have resistance at the moment approximately at $15.61 per ounce. We also have a pennant price structure which has been in development here over the last couple of weeks as well. What we really need to see next week is a resolution here for silver. We do have higher lows, but we also have lower highs here as well. So likely next week could be the week where we do either get a breakout to the upside here, clear above some of this recent resistance at approximately $15.50 and start to make a move up to $15.61. And above that, if we were able to break above that level, the next major zone would be approximately $15.85 here if silver can break out above this recent consolidation. On the flip side of that, if silver silver does not get supported next week and we break below the weekly lows here, it is vulnerable to a retest, taking the price back towards $15 per ounce. Now, moving over to the US dollar index, we have actually reached the upper Keltner channel and we're just below the monthly pivot as we go into next week. So this actually could be an important point of resistance for the dollar going into next week. I would look at a couple of different scenarios here. So one is that we may form a 3 white soldiers price structure. So just get another day of follow through on Monday, putting pressure against a number of currencies against the US dollar and potentially gold and silver initially on Monday, but then some sort of a reversal from overbought. So we might see a spike high here on the US dollar at the beginning of next week, and then we get into a very overbought condition. We see some natural profit taking, and then we see a reversal. Another scenario for the US dollar could be that we would hold at this Keltner channel and just below the monthly pivot, we see some profit taking at the beginning of next week and we get a temporary pause in the US dollar. Overall, the best way to capitalize on the US dollar right now has certainly been to buy into dips. So I'm not a big fan of shorting the US dollar index, certainly not with the current sentiment of this market at the moment. Pullbacks are really buying opportunities on the dollar right now. Finally, moving over to crude oil, US crude oil rose by 1% on Friday as US sanctions against Iran look set to tighten supply. We have seen hedge funds and money managers cut their net long positions in crude oil again here, and we have seen another decline in prices over the last week. So let's move over to the chart and I'll talk you through some of the levels that we're looking at as we go into next week. If we have a look at the US oil chart here, what I would pay attention to is certainly this major channel which has been in place here going back to November of 2017. We've had multiple bounces off the lower end of that channel, and that is where again we found support on Friday. We've had a bit of a bear trap here where the price has broken back below the previous day's low, but then we've seen a reversal into the close and a bullish engulfing candle as well, which could suggest we might see some additional follow through in the early part of next week. We do definitely seem to be getting a lot of support at the lower end of this range at the moment, so I would be looking for a potential follow through move in the early part of next week. What I really need to see here for oil to maintain a longer term position would be a break and close above a lot of the recent resistance zones. This is really what I'm looking at in terms of the current range for oil, where we're tending to ricochet just between support and resistance. We have lower highs but also higher lows as well, so soon we should get a resolution. But again, if we can break and close above this resistance channel, this is where we could provide a good long opportunity, taking the price back towards the recent swing highs here as well. So I am keeping a very close eye on oil at this levels. It is right back at the buy zone and the accumulation zone. If it can hold onto this key level of support and we get a breakout going into next week, there could then be a favorable risk to reward opportunity on US oil. Now, of course, if you would like to find out more and be part of a community of successful traders, then do join us on our live trading rooms. As a member, you get access to the following. You get live trade alerts delivered via WhatsApp, email, and also SMS. You have access to mentorship, expert advice, in-depth market analysis, trusted insights so that you can know earlier to act quicker and maximize on trade opportunities. For more information and details on how to join the service, please go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And of course, make sure you subscribe to our YouTube channel so you are kept updated with the latest commodity reports.